Trust, and I, along with my colleagues, hope you, your families, and your teams remain healthy during this time. Prior to today's call, an agenda was circulated, which I hope you've all received. NCST will continue to publish an agenda each Tuesday in advance of our Wednesday calls. A couple of housekeeping items before we get started. All participants will remain muted during the call to avoid background noise. Should you wish to ask a question or provide feedback during our call, please either use the raise hand or chat features and we can unmute your line. With that, I'll turn the call over to NCST President Julia Gordon for our policy update and introduction of our guest speaker.
Terrific. Thank you so much, Erin. Good afternoon, everybody, or good morning, depending on where you are. It found weekly calls to be so very valuable for what we're doing here at NCST. Today, I'm very excited to say we've brought in a guest speaker for this call. And actually, we are going to kick off with our guest speaker because she only has a half an hour to be with us. After that, I will give a policy update and then we will have so let me introduce Ilana Pruess. Ilana is the CEO of Recast City. She provides support to small manufacturers in urban areas, and she has a long background in community development. She is going to be with us today to talk with you about provisions in the CARES Act concerning small businesses. I know that these are provisions we've briefly talked about on this call previously, and I know many of you are doing a lot of research and trying to make your own way through the morass of things. But I hope Ilana will be able to provide you with something of a roadmap and answer any questions that you have. There will be time for questions. So with that, I'm going to turn it over to Ilana.
Thank you. I do not have control over starting my video. Somebody on your end has to turn that on. But in the meanwhile, I'll see if I can share a screen. Even if I can't share video.
Oh yeah, we can see your screen.
Okay. So if you could turn on video, then you can see me real time as well talking about all of this. So let me know if that's something we can do. Because I can't control that. So thank you, Julia. I'm happy to join you guys today and share whatever information I've been able to collect over these very insane couple of weeks. As Julia said, I'm going to cover what was in the CARES Act as it relates to benefits to small business and nonprofits. So I'm hoping that it can help many of you. It's great to see, in fact, some very familiar names on this Zoom list. My background in smart growth and community redevelopment over the last 25 years means that I think I've crossed paths with a lot of you guys. I'm going to really briefly cover 4 different things. A framework that I've been using to think through this that I do not own, but that I stole from many other people. 3 key pieces to focus on in terms of the relief we're providing today and the rebuilding we'll need to do in the future. Some really important details about the 2 federal programs that got announced, and some information about some other programs, and then actions that we can take. And as Julia said, I'll take questions at the end too. So for those of you who haven't met me before, my name is Ilana Pruess. I'm the founder and CEO of a firm called Recast City. My background is in community redevelopment. I was at the EPA Smart Growth Program, and then was the vice president and chief of staff at Smart Growth America for a really long time. And then 5.5 years ago, launched Recast City. My work at Recast City is focused on helping local government, real estate developers, and other partners bring small scale manufacturing into downtowns and into redevelopment projects. They create inclusive business, better paying jobs, bring energy back to storefronts that have sat vacant, and really energize a population. Not something I can focus on that much right now during this crisis, but that's what I live, breathe, and eat. And it's all through direct engagement with community members about their businesses, about their needs, and building really short-term, quick-hit projects and policies to make a difference in communities. What I am focusing on these days is all about how do we save small businesses. And in general, before this, when I think about small business, I focused on what most people deem micro businesses, businesses under 50 people, most of the time less than 20 people. But these days, Small Business Administration, as always, refers to small businesses as under 500 employees, and even has broken that apart to say if you are a franchise and each franchise or each location of your business has less than 500 employees, you can still receive benefits under these programs. So the framework that was introduced to me that I'm really trying to think through is 3 steps. One is contain, which we've all been working on, right? We're all under stay-at-home orders. We need to stay away from each other to contain the spread of this virus. A really essential first step. The second step in the framework is relief, and that's what we're really focusing on, and in fact, just starting to focus on right now. So that's the new unemployment insurance provisions that have come out of states and out of the federal government. These 2 federal programs, EIDL and PPP, which I will explain in a little bit, and then state and local loans and grants that are getting launched pretty much every day. This is how do we just help, the relief is really about survival, right? How are we helping people and businesses survive this crazy pause in our economy so that we can all be there on the other side of this to get to stage 3, which is rebuild. How do we come out of this? And from my perspective, how do we come out of this to rebuild, to build a more inclusive economy? We know that there are a lot of inequities in our communities going into this, the highest income inequality we've ever had under recorded history, huge racial wealth gaps. How do we take this pause to really look at how we do what we do and build in a more inclusive way coming out of it? That's my perspective on it. There are 3 key pieces to relief and rebuild that I think a lot of people are not focusing on. And your role in the work that you do, I think, makes you incredibly well positioned to focus on these areas. One is that we need to continue to strengthen social connections. Research out of Katrina showed that business owners that had strong social connections to other business owners survived that catastrophe better than those without, because they could barter, they could help each other, they could make trades. And so I think we need to continue to really focus on how are we strengthening social connections for small business owners, but also just people in our neighborhoods and in the projects that you guys are responsible for to make sure that they're getting the resources that they need. Second, I think we have to help small businesses find revenue now. So what can we do to help them pivot and position themselves to serve a need that is there today? It might not be what they were doing before, but it might be what people need right now. And the more that we can help businesses do that, the more that we can make sure that our businesses in some form are there on the other side of this. And the third is that we really need to make sure we're providing relief that reaches all populations. One of my major concerns with the federal programs are that they're first come, first serve, which I understand in a time of crisis, but it also means that our small business owners, particularly in our immigrant population or our lower income population, whose payroll books aren't organized or even all that official, may not be able to benefit from any of these programs because they don't have their paperwork ready to go. So these federal programs are more likely to help bigger, more established nonprofits and small businesses versus the micro businesses that are really the lifeblood and the economic backbone of our neighborhoods. So that brings us to the 2 federal programs. I lived in federal, as I said, I was at the Environmental Protection Agency at the Smart Growth Program for a long time. We lived in acronyms. I hate acronyms. So you're going to see me actually talk about all of this in full sentence and full word version. So there's 2 major programs. There's a lot of programs and a lot of funding that came out through the CARES Act. And I can answer questions about a lot of different stuff. There's CDBG money that's come out. There's all sorts of funding for communities that have come through. There's actually a couple days ago, I just saw it. And the Emergency Injury Disaster Loan Program is a program that's existed for a long time under the Small Business Administration. It's recently been adapted for the current crisis. You are now, there's a qualifying box in terms of disaster being a pandemic, which wasn't there before. And it has a new immediate grant that comes out of the loan program. So these are the big pieces about it. You can be a small business up to 500 people, a nonprofit, you can be self-employed or a sole proprietor of a business. Any loan you received out of the emergency injury disaster loan payment will be deferred for at least 6 months, up to 12 months. And the rates are fairly reasonable for a very long-term loan. And obviously lower for nonprofits, which was nice to see. These loans can be used to pay for debt, payroll, any bills that the organization, the nonprofit or the small business has. And applicants can receive a $10,000 grant as a first step in the loan within 3 days of application. That grant will then be folded into the loan if the applicant receives the loan, and it's a grant. So that part does not have to be repaid. Anybody who receives this loan funding can also apply for the next program I'm about to talk about, the Paycheck Protection Program, but the funds need to be used for different purposes. So one of the examples that was given to me was you can use your PPP funds to fund salaries in April and May, and you can use your EIDL funding to fund things in June. Or one goes to rent and one goes to salaries. So they can both be used, but they have to be used for different needs. That's the brief summary of this. I'm gonna answer any questions you have about these two. Then there's the Paycheck Protection Program that's also out of the Small Business Administration. Oh, just to go back for a second, this emergency injury disaster loan, the application is directly from federal SBA. The Paycheck Protection Program is also for small businesses, nonprofits, self-employed, and sole proprietors. It will cover, specifically, it's about covering salary and benefits for employee retention. So an entity who is having a cash flow issue, a revenue issue, but still has a lot of work to do, which I imagine qualifies a ton of nonprofits, although is a little bit harder for a lot of the small businesses. This can be really helpful. You can get up to 2.5 times your average monthly cost for total salaries and benefits, up to $100,000 of each person's salary if they're making more than that. The money can be spent on more than just salary and benefits. It can also be spent on state and local taxes. It can be spent on rent and utilities, but 75% of the funds must be used for salaries. It's got a really low loan rate and but a short term of for the loan. But the kicker in this one is that it can be forgiven. So if you can show there's some question about this right now, and more details are coming out every day right now. But if you can show either that 8 weeks later or by the end of June that you've rehired or retained all of your employees as compared to before the crisis, then the whole loan can be forgiven, which makes this a very powerful thing to help actually pay for things. I think it leaves us with a couple of big questions that I struggle with. How do we support the businesses that are not being served by these programs? As I said, a lot of our local businesses, especially folks that are lower income or people who have not really worked with government before on any funding programs, may not be prepared to access these, and also either may not want to go into debt or may not be able to be assured that they're going to be able to retain their employees 3 months from now. So it's not going to help them. And then what else do we do now to rebuild a more inclusive economy? I just talked about these, and I think that these really are key steps for us to be doing as we go forward. I think we have to really be thinking about how we push out the information, how we're reaching out proactively to people, and how we're really providing people with that direct assistance to be able to come out of this. I think it's in fact incumbent on sort of every organization and government entity out there to push the information out about any of the relief programs instead of just being able to wait for folks to come to us. If you're interested in more information, you can sign up for the Recast City newsletter. I seem to be getting more information weekly It seems to be useful for people, so as long as it's useful, I will put it out. Everything I learn about this is going up on LinkedIn real time, in case you would like to connect up there if we're not already, or you're always welcome to just email me directly. I'm trying to be completely available about this. I also have a summary about the two programs that I can put in the chat to share with everybody as a resource as well, to make sure you have that information. And I think that's it.
Thank you so much. That was a fantastic presentation. And we're going to open it now for questions. And Erin and Mariah, make sure people get unmuted as needed.
Absolutely. So just as a reminder, if you have questions, please utilize either the raise your hand feature or the chat feature, and we'll go ahead and get your line unmuted.
Erin, I see a couple raised hands.
I'm searching.
I can see that a question came up.
Kevin.
Oh, sorry, go ahead.
Kevin Moody. Kevin, I think I unmuted your line.
Yeah, it's unmuted.
Kevin, you're a bit choppy.
Okay, can you hear me now?
Yes.
Okay, good afternoon. I was a little late joining in the webinar, but the young lady said, the question that I have is, as a nonprofit organization, do you have to have W-2 employees, or can they be 1099 contracts in order to apply for the grant money?
That's a really good question. You're talking about the Paycheck Protection Program, I'm guessing, because you're talking about employee salaries. From my understanding, and I want to clarify that the Small Business Administration has put out a little bit of information on the details, but not all of it. From what I understand so far is that you can apply using the salaries going to folks that are not full-time W-2 employees, as long as you're going to be able to show retention of those people. There is more information coming out every day right now. So the best way to deal with that for the Paycheck Protection Program, all of that funding is going to go out to local SBA lenders. So I would reach out now to whomever you know who is an SBA lender at a local bank and ask them those questions directly.
Thank you.
Adrian Knight, I've unmuted your line, or I've tried to.
Hi there, how are you guys?
Good morning.
Wonderful. So thank you so much for, hosting this webinar. I really appreciate it and the information that's been provided. And I'm essentially asking a question similar to the person that just asked. I wanted to know, my company, it's myself and a partner, and we are, not really taking paychecks, but we do have 1099 people that we work with. I just wanted to know for ourselves if we would qualify for the Paycheck Protection Program, and what would be the steps, because we also need to find ways to support our family.
Right. So anybody who is a 1099 person, is a independent contractor or a sole proprietor, you can apply directly for this funding. And then you're going to show past year and current and as close to current year possible tax information to show how much you're earning. And then you would be able to calculate the 2.5 months based on that. So it's really specific that it's including contractors and sole proprietors and people who are working under 1099s themselves.
One more question, Adam. I believe I've unmuted your line. Adam, are you with us?
Yes, are you there?
Yes, we can hear you.
Okay, great. I have 3 different entities. One is a development company, one is a construction company, and one is a property management company. Am I able to apply for each entity separately, considering they have their own independent operation?
Yes. So hey, I get to turn on. Thank you. So nice to see everybody. So yes, as long as each business has its own tax identification number, you can apply for each business. It's really that distinguishing factor for identifying the business within it. Just as a follow-up, I don't know what the reporting requirements are for this yet. There's a whole bunch of boxes you have to check for the Paycheck Protection Program, but they're trying to make that one really easy to show. You're going to compare how many employees you had at one point last year and how many employees you had earlier this year before the crisis. And it's going to be based on that to know what retention or retaining the employees looks like. There's nothing that says that it has to be the same people. I think it's just based on numbers.
Want to find Ethan, do I be with her?
If people aren't going to,
or go play outside.
if people aren't sure if they can repay the Paycheck Protection Program funds, it's only at a 0.5% interest rate over 2 years. So it's still a lower loan as compared to the EIDL one, which is for a nonprofit is, I think it was around 2.5, and for a small business is about 3.75. So some combination is still going to probably make sense for folks.
Ilana, there are a couple of questions in the Q&A. First one is, are 1099 contractors considered employees or payroll for consideration of forgiveness?
Right. So that's still something that's going to be that the 1099 contractors could apply themselves, or the business can apply. But that one I would talk directly to an SBA loan officer at the local bank about it. From the initial briefing we got from Senator Van Hollen's staff on Monday, it looks like it doesn't have to be a W-2 employee to be able to apply for the funding. But I would definitely get clarification on that from an SBA lender.
Super. Next 2 questions both come from Dana Christian. First one is, what are the reporting requirements for the products described, and does retention mean the same employee or anyone in the position?
Right. So we don't know what the reporting requirements are. There is going to be some amount of information required for the Paycheck Protection Program about where which time periods you're going to compare and how you're going to show retention afterwards. With the EIDL, there is a bunch of paperwork required, but all of that is really streamlined now on the SBA website. And I can put, let's see, I can put in here a link to the piece I wrote about all this. It's now in the chat box. And it has a link directly to both the page for the EIDL and the PPP funding.
Super. Next question from Jeff Katzen. If you don't get approved for the EIDL loan, does the $10,000 get repaid?
From what I understand, you get the grant either way. There is a whole world of unknowns still. One of the other things is that it's going to be first come, first serve. So what I understand is that if you apply for the EIDL and you get the 10 grand, it's a grant. And then if you may qualify for the loan or you may not. It is unclear to me if they are doing any kind of first review of each application before you even get the 10 grand grant. That is something I do not understand at that detail yet. There is then a consideration that if you then end up getting the Paycheck Protection Program, the 10 grand grant is going to get folded into that. What does it mean by folded into that has not been defined yet. So does that mean that it's going to be 10 grand less from the PPP funding that you're getting, or does it mean that that becomes part of the funding that you're getting at that rate potentially, or when it all is forgiven, it's all forgiven? That's still unknown. So there's definitely a connection between the two pieces. SBA, I will remind you that the Paycheck Protection Program is coming out through local lenders. So reach out to your local SBA lending entity. If you go to the link that I shared in the chat and go to the short section about the Paycheck Protection Program, there are links to the template application for PPP, but all of that is not, all of the PPP information is going to go through a local lender. So there's also a link there to go directly to an SBA search for local lenders.
Perfect. And being respectful of your time, it looks like we might have time for one more question from Dana. Can you receive more than one benefit, and within what period of time? There may be a need now and further needs next year as we are in the unknown.
Yes, there's a lot of unknown. Yes, you can apply for both EIDL and PPP. If you get both of the sources of funding, you have to use them for different purposes, as was explained to me early this morning. You can use, for instance, you could use EIDL to cover April's salary needs, and you could use PPP to cover May and June. There is already discussion of the next COVID package that the federal government is going to work on. So who knows what we're going to have at our disposal a year from now, or what's going to be going on in our economy. But the EIDL has a much higher maximum. So I think that one's up to $10 million. So you can think about differently what your needs are under that.
Wonderful. Thank you so much, Ilana. For those that might still have questions, I know that Ilana had a stop at 1 o'clock Eastern. What we'll do is we'll hold those questions. We will get them to her and get you answers that you need. Thank you so much again for your participation in our call today.
My pleasure.
Thanks, Ilana. Bye-bye.
Bye.
Julia, back to you.
Thanks so much. I hope that was useful for people. I know it was useful for me, and I like the framework that Ilana used to put all of this into. I wanted to take just a few minutes now to update folks on the Washington policy scene. We talked about some things last week, and of course, subsequently, the CARES Act has been signed into law, and I just wanted to review a couple of things that everyone might know by now, but just in case, that relate to mortgage and home ownership and rental. So first, the good news is from when we talked last week that we did, somewhat improve the provisions on mortgage, and now it is clear from the text of the bill that owner occupants who have a federally backed mortgage, that's Fannie, Freddie, or FHA, USDA, VA, they are entitled to up to a year in forbearance. Not forgiveness, but just postponing their payments until a later date. What was not included in the bill and is still being worked through is what that means. A couple of notes that are important is, first of all of the federally backed entities that I just referred to have their own information out on their websites, very easy to find. Fannie, Freddie, and the government agencies all have good information out there. There is also very good information that's consumer focused, but useful for anybody who's playing an intermediary role as well on the CFPB page. So the Consumer Financial Protection Bureau does have information that you should be able to find. Also, it's pretty easy to find with respect to what consumers can do about their mortgage right now. For those same government-backed mortgages we just discussed, There is a national 60-day moratorium on evictions and foreclosures. That moratorium will prevent new foreclosures from being filed and also prevent foreclosure sales, as well as evictions. Again, that only applies to these government-backed mortgages, and we won't know what will happen 60 days from now. Not surprisingly, you might be asking, what happens to all the lenders and servicers, given those provisions? If servicers still have to advance payments, how are they going to afford that if lots of folks get forbearances? The answer is we don't really know yet. There are liquidity provisions coming out of Treasury and the Fed and Ginnie Mae and FHFA that we hope will be adequate, but this is an area that we continue to work on. The original hope was to get in the bill assistance both for homeowners and for servicers, but that's not how the bill ended up going down. On the rental side, for mortgages, for 1 to 4 family, single family mortgages, if you are either an owner occupant renting out other units in the building, or if you're an investor that owns a 1 to 4 unit property with a mortgage, you are also subject to this. You are able to get a forbearance under those same terms, and you will also be subject to the requirement that you not evict any tenants if you avail yourself of that forbearance. There is no requirement that any kind of forbearance be passed through by way of rent relief. So a lot of people are asking about what rental assistance there is out there. The bill included a number of provisions to help subsidize renters. There is an additional $5 billion in CDBG money. There are a variety of waivers and flexibilities in all of the major HUD subsidy programs. There is a 120-day eviction moratorium for any what they call a covered mortgage, a covered property in the bill, which really includes most properties that touch a government subsidy program in some way, whether it's Section 8 or something else. For unassisted borrowers who are not, tenants who are not part of any kind of HUD program, not voucher holders, not part of any other kind of program, there really isn't a separate solution right now other than the direct payments that will be going out to everybody in the country, as well as the 13 weeks of expanded unemployment, which adds $600 to existing, to whatever you're going to get in unemployment otherwise. So there is the hope that that will enable many tenants to continue to pay. Obviously, any provision that helps people continue to pay is what is going to keep the entire housing system and infrastructure more healthy along the way. The message is out there to homeowners that if you can afford your mortgage, you should pay that mortgage, that the forbearance is for those who have a hardship related to the COVID-19 pandemic. So I'm going to stop there and take any questions, and then I'll talk more about what's coming up next.
So Julia, we do have a question from Lois Healy. Question is, what happens if clients are in active modification? When Hurricane Irma hit and someone took a forbearance, they were turned down for a modification at the end of the forbearance due to the fact they had a modification when they were allowed their forbearance.
So right now, the bill didn't address any details like that. Right now, that is likely going to be up to the specific rules of either Fannie or Freddie, if it's a Fannie or Freddie modification, or the government channels, if it's a government modification. There is ongoing work on this. And so I will certainly take that question back to the policy group that's working on this. And to the extent you're working with any other organizations who are doing advocacy around mortgage servicing policy, please share that with them. It is going to be important to answer all these questions as quickly as possible, because the legislation was truly 35,000 foot level, and there are a lot of questions about it.
Thanks. We also have a question from Kristen Horn. Is there any loan forbearance program being discussed for multifamily borrowers?
There is a section on multifamily forbearance in the bill. It is a much shorter forbearance period. I apologize that I have not been spending as much time on the multifamily forbearance, but it's section 4023 of the bill. And there, for multifamily properties that are part of one of the HUD subsidy programs, there are these other provisions, whether it's for operating expenses or certain variances and waivers on other things. They are trying to push out assistance to multifamily operators who work with low-income individuals.
Wonderful. With that, Julia, I think we can move on. I don't see any additional questions.
Great. So the last thing I want to say before we get to hearing from all of you is that it is widely anticipated now that after these first three bills, which have passed, there will be a fourth bill coming up. As you know, Congress is out for a few weeks, but work has begun on this fourth bill. It is likely to include some more traditional stimulus type projects, such as infrastructure projects. Needless to say, everybody should be advocating for housing to be included as part of any kind of infrastructure bill. At NCST, we will be promoting inclusion in that bill for both the Neighborhood Homes Investment Act, which is the single family rehab tax credit that we've been working on, that I think lots of you know about, as well as advocating for a more NSP-like subsidy program to deal with vacancies or rehab needs that have arisen through this crisis. While there is no, there's no details yet about this bill, but everybody should be thinking about what they might want in it. There also may be, either as part of that bill or separately, some kind of technical fix for the CARES Act. And that's another place with, if you do single family, multifamily, which are sections 4022 and 4023, as well as sections 4024, which contains a number of the definitions. If you look at those particular provisions and see issues that you believe requires a technical fix, if you're in touch with your member of Congress, please share it with them, but you're also welcome to share that with us here at NCST so that we know what you need out there.
Wonderful. Thank you, Julia. Certainly, if folks have additional questions for Julia, please feel free to put them in the Q&A as well as the chat, and utilizing the raise hand feature. At this point, barring any additional questions, we'll move on to local market updates. And at this point, we'd like to hear from you. How are things going in your area? What may have changed? What challenges are you having related to closings, financing, and rehab progression? So at this point, I would turn it over to our buyer partners and look for either questions or feedback. We have a hand raised. Kevin Moody.
Yeah, Kevin Moody, KCB, Prince George's County, Maryland area, which is maybe about 5 miles right outside of Washington. Still a little too early determine how it will be affecting us. We do have some settlements towards the end of the month, and at least the loan office indicating that we still close. So right now, still a little early. And then the backup part of that is, has NCSC been communicating with sellers due to this COVID-19 to see if they will believe that there will be any additional discount because the market is just so uncertain.
All right, thank you, Kevin. So you were a little in and out there. I think what you asked, I think you shared that right now closings are continuing in your area, and wondering if the sellers are considering additional discounts. At this point, we have not finalized that with our seller partners. We're in communication with them regularly about both additional time and the considerations that are coming out of this call. We will certainly target those discussions for this week to be able to provide an update next week.
Thank you.
Absolutely. Looks like we have a question from Lois Healy. Suppliers, or a comment, suppliers are only open part of the day, so rehab is strained. Florida had 1,000 new cases overnight of COVID-19, so people are scared. Property we have on the books is listed. We have offers, but are worried about closings. Thank you for this, Lois. It's really unfortunate to hear about the 1,000 new cases, and it sounds like you're having a similar experience to others, in that the properties are listed and there are offers, but worried about closings. So thank you for that. Let's see. Adrian Knight, I believe you're unmuted.
Hi there again. So my question is regarding extension of the properties that we have under contract. So where we are, our lenders are really not lending at this moment because, I guess they're watching the market and what will happen. We requested an extension for a property that we have, and then the agent communicated with me to say, maybe the bank will grant the seller will grant 2 weeks, but I'm not sure how long they'll give the extension for, or if they'll grant additional time for extensions. So I'm kind of a little bit confused or worried as to what we should do. We did request the extension, and I'm hoping that if nothing changes, that we will be able to get an additional extension, because we have quite a bit of properties that we're sitting on and not able to do anything with it with regards to getting construction done, inspections, selling. We're kind of in that stalled mode. So the only way for us to take on additional property is to know that we have funding to do so, because we are, out by a whole lot right now and not able to buy any more without funds. So has there been any determination as to whether or not they're going to grant additional extensions? Is that just the agent that's saying that? Is what I want to find out.
Absolutely. So a couple of things there. So the first thing is, I would encourage all of you that need extensions on properties to work directly with either Don Pietroforte or Jennifer Hennemeth on our staff to get those extensions done, as opposed to going to the agents. The sellers have been very responsive to extensions thus far. I would also encourage those of you that are able to close to go ahead and close. So in places where there are not barriers to closing, continuing to close is certainly everyone's preference. But please do work directly with our staff, and we will work with the sellers on your behalf. Certainly the sellers directly may have a different response than the agents. So that would be my encouragement, Adrian. All right. I don't see any additional questions. Last week, many of you were still doing business as usual. How much of that has changed? I see something from Stephanie Quick. Read here in Indianapolis, we're moving forward with those under contract for rehab. Some subcontractors have voluntarily quarantined. There's also a slow process for city inspections. This slows the rehab completion process. We have offers pending that so far have moved forward, but we're concerned how quickly these will move under rehab. Those under rehab will move once listed. One thing that I do want to address as well, as I know it has been a concern, is the start of rehab. So even for those properties that are closing, please know that NCST understands that the rehab start on those will likely be slow, and there will be absolutely no penalty for that. So if that is one of your concerns, please know that NCST is 100% supportive of that. Mohan indicated that across the board, the process is slow. Looks like we have a raised hand. Bear with me. Tom Moses, are you there?
Hello?
Hi, Tom.
You got me now? Okay.
I do.
So I'm in two different states. Philadelphia is New Jersey and Pennsylvania.
Mhm.
The rules are completely different. Jersey seems to be open for business, which is odd to me because that seems like they have a much higher issue, with the virus.
Right.
But they are real estate showings are still happening. Their construction is still allowed. I'm letting one person in at a time to do their job. One house, but Pennsylvania shut down. There's no construction unless it's an emergency, and showings, I still haven't figured that out. There's virtual showings where the agent's allowed to go in without the buyer. So but it's just odd to me. There's completely different rules in two different states right next to each other. But that's my input. I don't know if anybody else has had the same situation or has any input.
Thank you for that, Tom. That does seem to be the consistent message we're receiving, is that there's not a one-size-fits-all answer here. Every place is operating differently, and even within an MSA, different parts of that MSA may be operating differently. Adam, with Crescent Development, we are significantly slowing down, worried about holding on to available cash to fund basic operations. Simultaneously, tenants are starting to stop paying rent and construction is slowing down. Thank you for that update. Stephanie Quick, now in a position where we have to take a step back and determine what our financial position is. Requested and received extensions on our pending acquisitions. However, we're evaluating at what pace we can move forward. Certainly for all buyers, keep us posted on whether or not you need to take a pause in your operations. Again, we're completely supportive of that and understand that. We are working with the sellers to pause inspections where we can and things like that, just to give you time. But feel free to continue to reach out to us and to me directly if you have operations related items. Jeff Katzen in Michigan, under governor's orders, and real estate is not an essential industry. Construction can only be done for things that are safety and sanitation related. City inspections are not happening. Realtors can't show homes, but current deals under contract can close. Thank you for that. Shelley Bancroft from Southwest Housing, we've paused all rehabs for now. Also, real estate showings have all but stopped. We're attempting to complete closings that are already in process, but that's been a challenge as most city departments are closed, as well as county register of deed offices. We're finding that for our seller partners as well. Some properties have had to be paused simply because foreclosure deeds can't be recorded. So thank you for that. I believe that's it as far as feedback that we've received. Julia, do you want to talk a little bit about our buyer survey and the guest speaker suggestions for the future?
Sure. So in a communication yesterday, and I think also this morning, you should have received a survey that we are conducting. The survey has two overarching purposes. One is to obtain some basic information from the field that we can use both for the purposes of our own operations and discussions with sellers, as well as for our work on the policy side. The second part of this question will really have to do with finding out what your priorities are for these calls. We're finding these calls very useful. We are assuming, since many of you have shown up more than once, that you're finding it useful too. We did bring in Ilana Pruess today as a speaker, and we would like to bring you access to more speakers on topics going forward, and would be interested in receiving your input on what type of expert or access to experts you would like to have on these calls. We really can find someone for just about every topic. I think next week we are likely to bring in somebody from a large mortgage lending operation for them to talk more about what they're seeing nationally that relates to the discussion we've just had about what you're seeing in your own markets. We are looking for other ideas as well, and things that you'd like to know about or connections you'd like to be making during this time.
Julia, Frank Cornier, topic: environmental reviews required when using home funds. And thank you, Frank. We'll go ahead and add that to our list for going forward.
Right, and that's, I would of course check on the HUD page. There is a fairly extensive listing of different programs and the flexibilities and waivers that are being put in place at this time.
Wonderful. Does anyone else have any other feedback or questions for our NCST team before we sign off today? And with regards to the guest speaker and topic suggestions, please feel free to reach out to your community development managers, myself, or Julia with those suggestions. Kevin Moody, are you there?
Yes. The other question that I have, based upon the moratorium on new foreclosure properties, do you happen to have any idea on the availability of new properties to show up in our portals to look at and or to purchase?
Yeah, great question. So at this point, we can't speak specifically to what inventory is going to look like in the coming weeks. In further discussions with our seller partners, we hope to have that certainly before next week. Right now, as you can imagine, things are just quite uncertain. Properties at this point have continued to flow in. We expect that to slow down to almost even a stop. The bigger challenge we've been finding is that because in several places appraisals cannot be done, that the pricing piece it's what's lagging. Although we are still getting some pricing and some new properties, we expect that, like I said, to slow down, but at this point don't have a specific time frame for that.
And Kevin, your question reminds me of something I may not have mentioned during the policy briefing, which is that the statutory foreclosure moratorium does not apply to vacant or abandoned properties. Again, that is something where there is no statutory definition attached and is going to be have to be dealt with but by each source of REO under their own rules, at least as of now. But that will be a continued source of inventory in the market. But as Aaron said, whether it can flow through the platform the way it normally does is depending on so many other unknowns right now.
Thank you.
Wonderful. Julia, I don't see any additional questions or feedback right now. If you'd like to wrap us up.
Okay, well, thank you to Aaron. Thank you to Ilana in absentia. And thank you to everybody for coming and being together. It is wonderful to have this opportunity to be with each other, if only virtually. Our hearts are with all of you as we wish everybody continued personal health. We know it's a very difficult time for your business. We hope you'll be able to take advantage of some of the protections the government is providing And of course, please let your CDM or Aaron or myself know if there are other concerns that we can help you with. And have a good day, everybody.
Thank you.